Hello, investors. Welcome to yet another edition of 18 Minutes with 180 Markets. Friends, supply and demand. If there is one question every great investor asks anywhere over in the world, over any time period, in any capacity, it is where is the structural demand versus supply and where is the imbalance? And that is why I'm so excited today to be joined by Stewart Dickson of Variscan Mines, because Stewart is hunting for base metals and specifically zinc that has a structurally very, very strong supply demand story. And he's looking anywhere and anywhere for it. But specifically, we're going to talk about his project in Spain. And with that introduction, Stewart, welcome to 18 Minutes with 180 Markets.
Thank you for that introduction, Greg.
Hey, Stewart, everybody has a story. Can you just tell us in a couple of minutes about your background?
So the background to my involvement in Variscan is I was approached by the company's major shareholders some years ago, who are Asian investors, ultra high net worths who run their own private equity business in Singapore. And they asked me to join the company to lead some change and be very European focused. And that's culminated in the acquisition of the high grade, high quality zinc assets that we've acquired in Spain a couple of years ago, and delighted to be pushing them forward.
Right. And you said specifically in Europe. Can I just ask why specifically Europe? Is it just an area that you have expertise in or familiarity with, or is there a certain magic to Spain per se, especially for zinc?
I think it's all of the above, actually. So my working career professionally has been banking, mining banking, focused in London, with responsibility for Europe. Since leaving banking, I've been involved in a number of companies in Europe, and had a couple of exits for shareholders, or delivering shareholder value for them recently. So it's an area I feel very comfortable in. Obviously, I'm British and Irish by background, so it's my backyard, and so I think it's an area that's been often overlooked historically for good and bad reasons. But I think now what we're seeing is a mega trend of relocalization of resources. I think you are definitely seeing Europe being a key driver of recognizing that they need supply chain security, they need supply chain ethics, and they also need cost advantage as well. So Europe is a net importer of metals effectively, and even as recently as this, in the last couple of weeks, you've had the European Battery Alliance, of which Variscan is proud to be a member, putting out a joint statement basically saying that they're making huge progress in their critical metal strategies, but the one area of weakness still to work on is supply in Europe, and what they are proposing a number of proposals to increase permitting speed and transparency to be able to get that through, to be able to liberate the metals which actually Europe is very, very well endowed with.
Yeah, it sounds like it's extremely company friendly. And then, specifically, can we turn to the zinc market for a second? Just tell investors about the zinc, what is going on with the market and why is it so attractive?
So the headline is zinc's on a tear right now, and it's absolutely flying. So we're seeing a spot price of well over $4,000 per ton. We are approaching all-time highs, and certainly near-term highs have been smashed. What's driving that is a number of things. So on the supply side, the energy dynamics, which certainly we're seeing in Europe, is causing smelter shutdowns, has definitely led to reduction of supply of refined zinc in the market. You've seen falling inventory. So if you look at LME warehouse stocks, they are very, very low. If you look at what's in the ports in Bilbao or in Rotterdam, it's very, very low. So there is supply concern, and I don't think energy is going to change that, or energy prices are going to change anytime soon up here. So I think that's with us for the long term. You also have you've had underinvestment in zinc mines for a long time, particularly in Europe, and I think that grade has generally fallen across a number of projects. Projects have not been brought on stream, and so that's where we're again happy to be an outlier and the opportunity for us is with a high grade project with infrastructure in the heart of markets, is a real opportunity for us. I think what I would say is on the demand side to that is you're seeing huge growth in infrastructure spend. You're seeing a growing realization of the importance of zinc as a critical metal as we all move towards net zero. So
Sure.
zinc has huge applications in solar and wind energy generation, and those are huge growth markets. So we expect the demand side to remain very strong for zinc.
Yes, and as I said in the introduction here, you always want to be investing where there's a supply-demand imbalance. And then, specifically towards the Variscan projects, you have two projects in Spain, one in northern and one in the southern part. Up north, Novalis Urias project. Can you just tell us a little bit about it? And then maybe also we'll talk about the catalyst in the most recent news as well.
So it's a great project. It's a brownfield project with a lot of greenfield upside. So we're de-risked in a number of ways because it's centered around a former producing mine called the San Jose mine, which we commenced drilling last year and are currently in the latter stages of phase 2 drilling currently. This is a high-grade asset. It's an MVT style area, deposits in the Basque Cantabrian Basin. This is geology that's been well understood, and these assets were formerly all part of Asturiana de Zinc, which was a large conglomerate which was acquired by Glencore. Sorry, Xstrata, which was then acquired by Glencore. So we are just adjacent to Rio Sin mine, which is one of the world's largest MVT mines, which closed in 2003. As I said, operated by Xstrata. So we're in the right address. We're in an ore field already. We know that. And right. What our strategy is to pull together the resources that are in that area to look at whether we can restart San Jose, bearing in mind what I said about price. We're in a super high price environment. So let's look to take advantage of that. And also make new discoveries in that area. We do not believe that there has been active exploration. We do not believe that the ore field is fully depleted. And I think the fact that we found lower lenses in San Jose last year and have continued to extend them this year is testament to that. And so I'm very super excited about the Novalis Urias project, because not only has it got a great geology, it's got high grade zinc, it's got high grade lead, but it's also the enabling factors, and these are things that typically kill projects. So what do I mean by that? This is infrastructure. So we are 35 minutes drive from Santander. This is an international port, deep water port. I was with the port manager on my last trip to Spain. They're super keen to provide us with any warehousing, shipping support that we may need for export. We also have an international airport at Santander because I use it regularly. And we also have the San Juan smelter, which is operated by Glencore. Again, visited them recently down the road. So we have routes to market, whether it be domestically at San Juan, which is the world's second largest zinc smelter, who again, a former Asturiana de Zinc asset. So they understand a lot of the project that we have. And we have a great collaboration, sharing knowledge, telling us how it was back in the day. We have a lot of mine development already in place. We have power on site, we have water on site. So when I say the enablers, they're all there.
Right, all those little pieces that people may take for granted, or certainly can delay down to. So certainly they spell delays for other projects for sure, and it could oftentimes be years.
And costs as well. So the capex that the projects then need to fund becomes huge.
Absolutely. And look, at the San Jose mine, you've done some recent drilling. What were the results, and what have you learned?
So the phase 2 San Jose drilling was really to follow on the success of phase 1, which we completed last year. And that did a number of things for us. One, discovered lower lying lenses. So we've got an ore body which presents itself as a series of vertically stacked lenses. They're not long, big tabular style deposits. They're very much lenses, inconsistent, irregular, but we do see certain patterns akin to Pine Point, which is a project that certain folks might know. So this is, again, consistent with an MVT style deposit, clustered pods, lenses here and there. So what the phase 2 drilling has really done is to take that on. It's to extend those lenses. It's to make linkages between those lenses, and our last results pointed to that. It's continued to also develop our understanding of the underground environment and what's happening. And that's really important as we take this learning and move it to Buena Ora, which is our exploration package around the San Jose mine.
Right.
And we're able to take those learnings and now get ready for surface drilling on that wider area. And this all is about building our understanding of what is in the ground and what can we develop. Remember what I said, looking at how can we define something where we think we could go mining early. Right.
And, the surface drilling that you just mentioned, investors are always looking for, what are the catalysts? What should we be looking for over the next 12 months? Which, can you just talk about that, please?
So everything we've done has been very, very deliberate, and it's all been done for a reason. So the next catalyst will be the publication of geophysics on Buena Ora in preparation for our surface drilling. Doing geophysics is hugely important pre-drilling, de-risk your drilling. So it typically identifies anomalies, typically identifies new targets, and confirms existing targets. So you're getting more bang for your buck when you drill. So that work has been done, and we'll be looking forward to reporting that really shortly. The drilling at San Jose, we've got assay results. Again, it's published that we're expecting assays very soon from there, and then we expect to have a further set of assays from San Jose. So we've got drilling results, we've got geophysics results, and at the same time, we're also looking at producing the so what. And the so what here is, you've got all this historic data, you've got all this drilling that you've been done with geophysics. What is the size and scale of this deposit looking like? And I'm working very hard with external consultants and our in-house geological team to be able to come out with the so what and the scale and scope of this project. And I'm super excited, given that we have a 9K strike.
I can hear it.
And we have a 3K strike on the Udias trend. So what I really want to do is put some shapes, some numbers, and to that, which will then inform how we then look to maybe commission concept studies, restart studies of the San Jose mine.
Fantastic, fantastic. And now, moving on to the Guajaras project, can you just talk to us a little bit about that one?
So Guajaras is almost like a lookalike in some ways, because it's, again, a former brownfield mine. It's centered on La Union mine. Again, former high grade. This is much more polymetallic. So we're seeing quite significant silver grades there, as well as seeing nice lead zinc grades as well. We have unashamedly focused on the Nevada's Udias project, because that is our main effort. You need a flagship. A resource allocation is super important for a junior. So we have done sampling down there in the last year. That came back with very positive results, and we're currently planning geophysics down there, and we're also currently planning drilling down there as well. So it's a super exciting project. It does have to play second fiddle to Nevada's, because that's where I think greater value creation will occur, at least in the short term. And so we're lucky, we're blessed with two high-grade de-risk deposits in Spain, and lots of news to come from both.
Right. And just to be clear, but those activities you just mentioned for Guajaras, would you expect them to take place over, call it, the next 6 to 12 months?
Yes, exactly right.
Okay, great. And then also, let's not forget that in Australia also you have some small, what I'd call upside optionality projects. Can you just discuss that a little bit for the audience, because they may not be aware?
Yes, I mean, Variscan's heritage is actually in Australia, not only corporately, but operationally. And so whilst we have tidied up over the years some of our holdings, our legacy holdings, and realized value from those, we still do retain a number of working interests, or NSRs, in various different projects. And I think I would just point to the NSR, 2.5% NSR we have over a piece of exploration ground adjacent to the Woodlawn mine in New South Wales, which just recently been bought and looking to restart that zinc mine. So again, it improves our exposure of zinc, not only from Spain, but also in Australia, and is consistent with the thematic. You know, we're very clear about zinc. We're very clear about critical metals more widely, and obviously zinc's role in that.
Hey, Stewart, you know, I have to ask, you know, zinc hovering about $4,200 a ton, you know, really going crazy. What are investors missing with Variscan, you know, and frankly, a lot of the zinc companies between the share prices and the commodity prices, because there really does seem a disconnect.
Oh, there's a huge disconnect, Greg. And it's not just zinc. I mean, actually, when I look across, probably the only one that's really truly mirroring commodity price growth and equities growth is probably lithium.
For sure.
And that's got a whole new set of supply demand dynamics to it. But I think certainly there is a disconnect in our own share price. I find it completely unjustifiable. I think the market's missing out. And the feedback we have is, look, you know, this is a great story. You're cheap. And so, you know, my simple answer is, well, you know, let's re-rate. And I think zinc has often been overlooked, and because it's typically been controlled by a small number of folks, and it's not an area where juniors typically have had access to. And so, you know, certainly in a wider global sense. So, you know, and I think more of the focus has been on copper in the base metal space, but I think it's worth just pointing out that zinc outperformed copper 2021. Zinc was up 28% in 2021. That certainly outperformed copper, and is already up 25% year to date, again outperforming copper. So, right. You know, while people feel that copper is the greatest way to play critical metals, it's clearly not. Right. I'm not saying there's anything wrong with copper, but you know, I think zinc is overlooked, and I think that those chickens will come home to roost, for sure.
Yeah, I agree. Hey, Stuart, we have to keep these interviews short, but for the audience, if there are one or two points about Variscan that you really want to leave the audience with, can you just let us know what they would be?
So I think they would be de-risked, great commodity exposure, undervalued, and set for growth.
Absolutely, and including up and coming drilling results. Stuart, thank you so much for your time. We're definitely looking forward to staying in touch with you, seeing these results, and as we said, you know, enjoying this huge supply demand story. Thank you for your time.
Thanks, Greg.
Bye-bye. Thank you for watching another presentation by 180 Markets. Don't forget, if you want access to thousands of ASX capital raises, head on over to 180markets.com.au, sign up, and get on board for our very next capital raise. Thanks for watching.